Very interesting panel about the impact of precious metals volatility on the jewellery industry. I'd first like to ask panelists to briefly introduce themselves. We'll start with John Butler, who is president of the International Precious Metals Institute and is joining us virtually. So, John, tell us a little bit about yourself.
Thank you, David, and good morning to everyone. Sorry I'm not there in person. I hope the weather is better in Vicenza than it is here in the UK. So, as you said, I currently serve as the president of the IPMI, that is the International Precious Metals Institute. That is the preeminent trade organization for all the precious metals, being gold, silver, platinum, palladium, rhodium, ruthenium, and iridium. And we've been in existence since 1976. We seek to bring together the entire value chain in precious metals, whether that be producers, refiners, fabricators, traders, bankers, and of course the ancillary services which are very important to our industry, such as insurance, logistics, and warehousing. We work very closely with CIBJO. We are very grateful for the support of Gaetano and the team, and thank you very much for the opportunity to speak here today. And we're working very closely with the jewellery industry, which is of course a very important part of the precious metals world. It is between 30 and 50% of total demand of precious metals. And at this time, as we approach a new era geopolitically with the inauguration of President Trump, his second term tomorrow, it's a very interesting time to be speaking about prices and what may be coming down the line.
John, thank you very much. Going down the line, starting with Tim Schlick, CEO of Platinum Guild International. Tim, tell us a little bit about your role.
Well, thank you. So I'm with Platinum Guild International, and for those of you who don't know us, we are working to create markets for platinum jewelry on behalf of the South African mining industry and the South African mining producers. And in that role, we really try to create incremental value for the trade where there hasn't been any before. So we work very closely with manufacturers and retailers. Currently, we're focusing our efforts in markets like India, Japan, US, and China. We have re-engaged Europe to quite an extent, which we try to do much more of. We are exploring other regions like the Middle East, and it might not be a surprise that we are not unhappy about current prices now, because it presents quite an opportunity for us.
Absolutely, we'll be exploring that in some detail. Andrew Morton is Managing Director of Weston, Beamor and Damiano Jewellery. Please introduce yourself, Andrew.
Yes, thank you, David. Good morning, everybody. So, as David said, I'm Managing Director of Weston, Beamor and Damiano. We are from the UK. We are a manufacturing company from everything from components through to mid to high-end 18-carat and platinum finished jewellery.
Thank you very much. John Jodry, please do introduce yourself, Group Business Director for Metalor.
Hello, so yeah, working for Metalor Technologies. We are one of the largest precious metal refiner. We are a Swiss company, but part of the Japanese Tanaka Group, and we operate, refine in 3 continents and serve multiple markets, including obviously the jewelry and watchmaker market.
And Damiano Zito of Pure Gold, please introduce yourself.
Good morning. I'm the founder, the chairman, the CEO of Progold, which is a company that is operating in between refiners and jewelry manufacturers. We do make alloys, and we are very active also on the additive manufacturing segments of powder metallurgy.
Thank you very much. So to introduce the theme, the big story in precious metals throughout 2024, and as we look forward into 2025, clearly is gold. Gold prices in calendar 2024 rose by more than 25% in dollar terms, and the outlook at the beginning of 2025 is extremely well supported for gold. I'd just like to kick off by giving a little bit of background on this, and if John Butler could please intervene. Could you, John, sum up briefly What key factors drove the gold price up so markedly in 2024? And also, I understand you may be able to give us a projection for the gold price in 2025. Gold is currently standing at just over $2,700 per ounce. John.
Yes, thank you, David. Well, indeed, last year was the time when gold appreciated very rapidly. We saw a series of all-time highs up to almost $2,800 per troy ounce. Therefore, today we are very close to that all-time level. And the reasons for that last year were, first of all, the interest rate cuts, which happened in the United States, which lowered the opportunity cost of holding physical gold. The second big factor was the de-dollarization theme that's been a part of the market for some time now. That is to say, central banks around the world taking their resources out of dollars and putting them into alternatives, including gold. And of course, that does help drive that physical buying of gold and feed back into the price. And then the third thing was the geopolitical uncertainty. Of course, last year was the year of elections. We saw many different countries change government. A lot of long-standing political alignments become disjointed. And gold tends to be the go-to in times of political or economic turmoil. Not to mention the wars that still are ongoing, unfortunately, in Ukraine and at least until very recently in the Middle East. All of those factors drove gold higher. Now, as we stand on the precipice of 2025 and the new Trump administration, it's very timely to think about what may happen. And it just so happens that Mitsubishi Corporation, which is my day job as head of business development there, we just put out our forecast for 2025. And we expect, on average, gold will trade at 2,730 during 2025. So a little higher than where we are today, but that could mask considerable volatility. We may start to see gold go above $3,000 per ounce, a new all-time high at certain points this year. And generally, many of the same drivers are at play here with lower interest rates, with continuing economic and political uncertainty, and that continuing de-dollarization move by the central bank.
Thanks, John. So, John, would you agree then essentially that, to sum up, you're looking for slight upside in the average gold price in dollar terms through 2025? Right now, the precious metal is clearly underpinned by issues such as uncertainties over policies from the incoming Trump administration, uncertainties over what the tariff policies can impact upon trade relations going forward. And these are underpinning the gold price essentially as a safe haven. Would you think that would be a fair comment?
Absolutely. And I think there's a couple of additional factors at play here. And this is why we don't see gold necessarily shooting in a linear way to ever higher highs. The one big uncertainty is how inflationary the incoming Trump administration's policies may be. At least on the face of it, tariffs and immigration restrictions are quite inflationary. And if inflation really does take off, on the one hand, that is a positive for gold as an inflation hedge. On the other hand, it would suggest that interest rates in the United States have to rise sooner or later. And in that rising interest rates environment, that's where gold will, relatively speaking, suffer. So there is an argument to say that gold's gains will be capped this year. Certainly at these levels, it's not attracting a whole lot of new physical investment. And indeed, as you allude to, the jewellery industry may be a little bit cautious about its use of gold at these near record highs. So we do see some headwinds, if you like, from the stronger interest rates in the future if inflation starts to rise. We also see a lot of competition from the US equity market. Investors right now looking at some very strong gains in US equities, particularly in the tech sector and in crypto, and that might build depending on the policies of the incoming US administration.
All right then, so panelists, we're looking at a very constructive gold market outlook for 2025. Gold prices right now are just about $65 below the historic all-time high of $2,790.15 per ounce touched in October. There's a constructive outlook driven by uncertainty over incoming US policies, but also by expectations of falling US interest rates. I'd just like to kick off with a question to all of the panel, anybody can come in on this one. A very soft question, just to get, this is the easiest question of this session. We've seen a transformative rise in gold prices. How do you think this is impacting upon the psychology of the gold jewellery consumer? Are they even aware that the gold price has gone up? Any thoughts on how the mindset towards gold jewellery may be changing as a result of this surge in price? Tim?
Yeah, I'd like to comment on that because we actually have research for that. We're starting to get a little bit concerned because at some point you feel that consumers might notice. So we did research across all our markets quite a while back, but nothing has essentially changed. And there were a couple of points on that that were really, really interesting. Number one is, by and large, maybe with the exception of India and China, consumers are blissfully unaware of spot prices, particularly for platinum, but platinum for gold, but usually people are not too aware of it. But what was more interesting once we dug a little deeper was when we asked questions like, well, now we're telling you that platinum is cheaper than gold, and I can, of course, only speak to platinum. Would you still pay a premium? And what we found is that 2/3, 67% of them, were still really, really wanting to pay a premium to quite some extent. So what we feel from our point of view is that psychology-wise, at least for platinum, the metal hierarchy is still very much intact. It's platinum, gold, silver, and then all the rest. What I don't know, and I can't speak to it, is that, of course, it creates more awareness for metal in the jewelry space in the first place, because gold is being talked about all over. And I think that that's for us to decide whether that's a good or bad thing.
Andrew, I can see you're sort of looking to comment, I can sense. Overall view, how is the consumer thinking about gold jewellery now in the context of the price rises?
Scrap price. I think that's where the consumer is looking.
Okay.
They may not be looking at the new spot price in the sense of buying a new piece, but you can see by the kilos that are coming into the recycling houses that I think that's where they're seeing it. So I think in the end that will translate. The consumer is not daft, they understand. And with the general economic situation where people need to realise cash is the issue. They only have a set amount of cash to spend. So they have to find other ways of generating it. And I think, unfortunately, the jewellery that is stored in people's dressing tables and vaults and bank safes and all the rest of it no longer is being reused and remade. I think they are having to use it as a scrap price. So that's where I think they'll get the knowledge about the rise in price.
Certainly in the UK, if you pass a high street jeweller now, you'll see, come and sell your jewellery, come into the store.
On every high street.
Yeah, and you see it on TV ads as well. So there's some awareness, I think, of the rising gold price. So let's now break down this impact a little bit. And I'd like to ask Andrew, who's very much on the front lines as a manufacturer of jewellery, about how his market is responding to this surging and also volatile gold price. Andrew, are you seeing, are you anticipating increasing output of gold jewellery at lower purities, shifts, say, down from 18 carat to 14 or 10 or 9 carat?
Yeah, the simple answer to that is yes, we are. I think it's interesting. We're seeing more yellow metal being required from a fashion point of view and an aesthetic point of view, which I think is interesting given where the prices are rising. But in order to do that, depending on what level you're at, you can see maybe the traditional 18 carat customer moving to 14, the 14 moving to 9, and then you're even getting the 9 carat customer moving down to plated silver items. So again, I think
this taste for yellow is which market segment? So we're talking about indigenous UK, Nordic, where are the tastes for yellow gold coming from?
I would say it's across Northern Europe and typically the UK. We see that's where we've seen that expansion to come through, to be fair. When you go into the US side, we tend to still see that as white and typically still platinum.
So you're clearly seeing shifts into lower caratage, lower purities.
Definitely.
Gold jewellery.
And certainly in the UK, 9 carat bias.
All right. I can see, Damiano, you're itching to respond. Go for it.
Yeah, I mean, I agree. This is something also from our perception, even in a very global scale. The thing is that it will be temporary. It's something that always happened when the gold price was rising, but not really. it is going to turn with something for a long term, something temporary, and very much impacting the unbranded manufacturer. The top brands are not really very much impacted on these, and they have other way or other, problems connected with the fact that the gold price is growing.
John Jodry, how do you see the situation?
Yeah, so with the gold price going up, there is basically three strategies that manufacturers can tackle. The first one is, as it was mentioned, to lower the amount of gold in the alloy. This is what we see mostly in Europe, and we start seeing that even in Switzerland, which was always an 18-carat market, but we see that now we go to 14 and even lower carats. The other strategy is something that we see more in Asia, because typically Chinese market still want 24 karat, so you can't really play with the first solution. So what they do, they use new technologies, new design, and I think Damiano is very versed in that, to make geometries that consume, have less weight, but still have the appeal that consumers are looking for. And the third solution is to move away from the metal and go to another metal, and that is something we have not really seen.
Certainly exploring that today. Just interested in any member of the panel's views on gold as a store of value in jewellery. I mean, presumably there are some market segments that will not compromise on purity. I mean, my initial feeling would be certain aspects of the Indian domestic market, for example, particularly at the high end for wedding demand, and certainly in southern India, affluent British Asian gold jewellery customers. My feeling is that they are not compromising and that they will maintain demand for 22 carat gold jewellery. I mean, do you agree with that? And how do you see gold as a store of value in the mindset of gold jewellery consumers? Open to anybody.
Okay, so I can start. I mean, personally, I believe that, which is the culture that there is in India, they really see buying gold as a form of investment. And this is happening also in our job when we try to sell high characteristic products. They are not much more interested on the final, really final performance of a single alloy they use, but they are much more purchasing gold with a different shape than a bullion. So they buy jewelry. I don't want to say that they don't buy jewelry with a beautiful shape or beautiful pieces of jewelry, but what happened for sure is that they have some money to invest. They buy less gold, but they keep intact the value that they are investing.
Damiano, do you think that some gold jewellery consumers essentially will simply buy less weight? They'll maintain their demand for 22 carat gold jewellery, but given that their household budgets will be somewhat constrained, that they would simply buy less weight of jewellery?
In my opinion, yes.
So just a very brief comment from me. I was at the IIJS India International Jewellery Show signature earlier this month, and I was talking to jewellers there, and their feedback on this issue was that in southern India, particularly areas around Kerala, that the demand for high purity 22 carat gold jewellery very much is maintained. However, in northern India, there's a slightly different culture, and that some of the production there is shifting into lower caratages. Damiano, let's talk a little bit about technologies and design innovation in response to very high gold prices. What could you sort of, in general terms, without going into too much technical detail, can you sum up the technical strides being taken now in gold jewellery design to respond to the high gold price? I mean, for example, is electroforming becoming increasingly used in gold jewellery design technology, and can you tell us a little bit about that?
Yeah. Lowering the caratage is also a technological solution. You change the alloy to make something using less quantity of gold. Electroforming is another technology. I think that it will not the one technology that is going to mitigate the fact that the gold price is growing, because even it is always a technology very attractive for making something very light. But the issue is that they are, my personal opinion, too light. It's really a niche, because finally a piece of jewelry should also bring some feeling that is something, not something that you launch to the air, it never fall down. So something that is flying, not really much. But of course, for some specific application, like very big volume earrings, is something that makes sense. Additive manufacturing is another technology that really can mitigate this problem, because that one allowed to perfectly tuning the proper weight that someone is going to make. And when the gold price is growing, you have two choices to make the cost of the material less impactful, or you reduce the fineness, or you reduce the weight, having the same apparent volume. But finally, and just I close my answer here, the most important issue that the high-end jewelry manufacturer, they find, since in the last 15 to 20 years, the CNC machining was technology getting traction, the inventory is really impacting the numbers of the company, and even the financial constraints that the company has, because last year maybe they had invested 50 million in inventory, and this year they have 85 million. And this is the money they need to work. So the working capital is going too high. And this is the only impact. It's much more operative than on really the volume that they are going to sell.
Thank you. I'd just like to follow up with Andrew, if I may. Andrew, you talked about shifts to lower caratages in response to the very high gold price. Could you talk about other ways in which you've had to respond as a manufacturer to the very high gold price? For example, are you offering lighter weight jewelry designs? And also, what has been the impact of the weak pound on your operations? I mean, the pound has fallen markedly against the US dollar, in which gold is denominated in recent weeks. And how does that affect operational psychology and decision making?
Well, again, it all affects cash and cash flow and what's available to what you can buy, what you can afford to buy. High interest rates, if you're heavily invested in your metal and you're leasing it out, of course, that's an increase in your cash flow. In terms of mitigating it, yes, as the panelists have already said, it's about design. It's about looking at products that you can re-engineer in order to meet a price point for a required client. You have to continually go around the cycle. And I think it does level off, I would agree. I think the worst thing we could have happen this year is to have a series of spikes, because the confidence then falls away, and then it almost gets to a point where the re-engineering becomes an irrelevance, because it comes back to that euro or pound note in the customer's pocket.
How does extreme volatility in the gold price impact upon your operations?
Well, we tend to see the retailers then understandably become more nervous about putting stock on the shelf, or filling the vaults that they have in the back of their store and having 2 or 3 examples of product that they could offer to a retailer, to an end consumer. And then they become more constrained in terms of design, and it's then about making the sale. So you tend to see they go to the traditional designs as opposed to going for something that is re-engineered in order to meet a different marketplace. There's a whole combination. There's never ever one thing that drives any single entity, really.
So before we sort of move on to platinum, let me ask you just one last question, which is a theoretical question, a nightmare scenario. How would you respond if you faced the following nightmare scenario? I would assume it would be a nightmare scenario for your operations, which would be of a continuously rising gold price throughout the rest of this year, underpinned by greater expectations for US interest rate cuts, uncertainty over, say, US policy, triggering safe haven flows into gold, all combined perhaps with a potentially weak sterling. If that scenario happened, would you shift out of gold, increasingly perhaps into alternative precious metals?
If that all happens, I'm not getting up. Would we move? No, because if there is a requirement out there from the customer base, then we will adapt to meet that. What will obviously happen is it will shrink and change, and yes, we may move across to the alternative metals. In the end, you have to go and research and find your marketplace.
Do any of your companies here or your activities involve hedging strategies for gold? And if so, could you just briefly explain what hedging solutions you employ?
So, like all refiners, Metalor Technologies need to rely on hedging loans, basically, to lease metals from the bank. And over the last 12 months, as we had our group treasurer was spending most of its time discussing with the banks and trying to get increased leasing lines. So this works when you have a good reputation, when the market trusts you. But the reality is, if the prices continue to go up like this for gold, there may be a moment where banks simply start to look at their exposure on the gold market and decide that perhaps the return on the risk is not good enough for them. And this could be a problem, because if refiners cannot finance their operations, then there is no gold arriving on the market anymore. So this could be an issue, at least for some companies.
Presumably you're tracking currency as well, particularly if you're operating in currencies that are not the US dollar, because if your domestic currency is falling, then that will make your acquisition costs of dollar-denominated gold higher.
I'm not old enough to have seen the Swiss franc falling, so I can't really talk for that scenario.
Good. All right, excellent. Did you want to add something?
Yeah, but exactly the same like John. Even if we are downstream on the supply chain compared to him, but metal lease is the most common practice we do, and we have the same issue with the banks and so on.
All right, so we have a very constructive outlook for gold prices. They have risen markedly. We saw a series of all-time highs from late 23 right through 24 to late 24, very constructive. That presumably now could create an opportunity for platinum in jewellery manufacture. I mean, platinum prices are just over a third of gold prices. And I remember, say, 20 years ago, platinum prices were higher than gold prices. And platinum is often seen in qualitative terms as the highest quality jewellery metal. So, Tim, that's head of PGI, I mean, how are you embracing this opportunity for platinum jewellery manufacturing in the context of the surging gold price?
Well, for us, I think it is, of course, an opportunity. It is platinum being at a third of gold, and our direct competitor, if you will, is white gold. So, of course, that puts us in a competitive position. That's what we're trying to do. And for me, it's really interesting, because if you go back to the inception of white gold, it was invented in 2012 by Germans in Pforzheim, and it was marketed as the cheaper alternative to platinum. Exactly. So it's weirdly ironic that me as a German CEO is now benefiting and trying to course correct that. But I think what we feel is other than, we can't be complacent, just sit around saying, wow, now the industry will turn to platinum and embrace how great it is. What we feel is needed, and we're currently working on, is making that shift from white gold to platinum as easy as possible. We already see that, I think at current prices, we are the better metal or platinum is the better metal for 18 karat gold, 18 karat white gold at the moment. That's an opportunity. If prices go north of 3,000, it's even viable and even commercially viable to be to replace 14 karat gold. White gold. But what we see is our role in this is making the shift as easy as possible. As you know, that I'm not a manufacturer, but within 10 years of PGI, what I certainly learned is not easy to produce platinum, and it's not just putting in a different metal and there you go. So what we're doing in conjunction with our sponsors, in particular Anglo-American, is we develop specialty alloys that make that switch a lot easier. For example, we launched last year Inovio, which is a specialty alloy that is much easier to work with than current platinum alloys like PTRU or something. And we see that that's our current role, to help the industry get on board to use platinum a lot more instead of white gold.
And in terms of marketing platinum in jewellery, Tim, how do you see the relationship between platinum and diamonds evolving? Clearly, natural diamond prices have come off somewhat, and laboratory-grown diamonds have fallen even more. What associations do you foresee in terms of marketing platinum jewellery with diamonds? What's changing? What's shifting there?
Well, I think it's not so much changing, but it's making the proposition wider to me. So we've always said that platinum is the fifth C of the engagement ring. It's the crown, because nothing holds the diamond more securely than platinum. And that is true for a lab-grown diamond and a natural diamond. That doesn't change. But so what we're trying to say to consumers is, we are the metal that holds your dearest stone as firm as we can. And it's upon you to decide whether that's a lab-grown diamond or natural diamond. We are really trying to be diamond or stone agnostic. But what we did see is, and we're benefiting this to quite an extent, because of lab-grown diamonds, consumers have more money available for the setting, and very often they then choose platinum, prefer to choose platinum, because they're not spending all of their budget on the stone alone. So that's a positive for us.
Yeah. Thank you very much. So Andrew, Domino Jewellery, biggest jewellery manufacturer in the UK, you're in the front lines here. How are you responding to the high and volatile gold price in regard to platinum and diamonds? What sort of new product designs are you coming up with? How are you responding to these shifts?
Again, I think we still sell 55% of the product that we manufacture and sell is still platinum based. We've always been, for the last 30, 40 years, a promoter of platinum from a setting point of view, yes, because of its mechanical strength. In terms of lab-grown diamonds are here to stay, and whether you feel happy about that or not, I think we have to accept it. So you're then back into the design aspect, and that's then driven by the designers and the people with the trend experience to see what's coming next. Typically, solitaires we've seen the face halo disappear, because that used to be how you had a smaller center and then you surrounded it with the stones to make it large on the finger. Solitaires in lab grown are now 3, 4, 5 carats. So we've definitely seen a shift in single head size, without a doubt. And whether that's in gold or platinum, that's what the consumer's looking for, driven by the diamond price, not by the metal price.
Tim, just a quick follow-up. You said that you're stone agnostic. I mean, would you ever consider, for example, an alliance with the Natural Diamond Council to promote use of natural diamonds with platinum? Would that be in your interest in terms of promoting platinum to help rebuild demand for natural diamonds or not? Or are you doggedly stone agnostic?
No, of course not. So we're working with everyone. We worked with, I mean, you know that De Beers is very, very close to us. And of course, we try to create consumer propositions wherever we can. And if you ask me personally, I think that nothing is as special as a natural stone still, because it's a natural product. It's certainly a lot older than a lab-grown diamond. What we're saying is we need to cater to the consumer and what they want. They should be at the basis of all decisions. And if that's for the natural diamond, we're very happy to do so, because we feel it's a more natural fit of the best diamond there is with the best metal. So we feel that's, of course, that's the easiest stories to tell, but we should still leave it to the consumer, what they regard as precious.
But in terms of marketing, you're wide open also then to marketing platinum with laboratory-grown diamonds in jewellery. I remember I was, just over a year ago, I attended a PGI event in London with Rox, the retailer, who were blending platinum with laboratory-grown diamonds. So you don't see any conflict here between promoting platinum jewellery with natural diamonds and indeed with laboratory-grown diamonds?
Well, this is no cop-out, but agnostic also needs to be a little bit neutral, a little bit Swiss about it, because I think that we see where lab-grown diamond sits at the moment, so we would probably not lead with lab-grown-led consumer storytelling. So we wouldn't probably say, this is lab-grown diamond, you should put a platinum ring to it. What we're saying is, whatever is most important for you, you should set this in platinum.
Could I ask John Jodry and Damiano, in general terms, are you seeing interesting shifts in your business operations linked to platinum underway at present due to the impact of the high gold price?
So from the jewelry market, unfortunately, no, at the time being. And it's surprising, as it was said, all indicators are green for the usage of platinum. We have overcome a lot of issues, especially technological ones. I think the consumers, many of them, are or should be ready to move to platinum. One of the, in my opinion, fundamental problem, it's not the refining capability. In fact, Metalor has heavily invested for PGM refining, not only in Switzerland, we were already strong, but in America and in China. The main problem I see is that if you have a piece of jewelry, a platinum piece of jewelry or an investment bar, and you try to resell it, you are going to take a significant discount. And that for people who always have in their mind the intrinsic value of the metal, and I know often in jewelry the message is the beauty of the jewelry piece, it's the value, the love, but the reality is most people still have in their mind the intrinsic value of the metal. So when you want to resell platinum jewelry, perhaps to buy another one, and you take a big discount, this is very detrimental for the whole industry, and I think this is where a lot of work has to be done.
Well, I can add to that because I echo that. That's also to your question, lab-grown diamonds. I think our biggest concern is for lab-grown diamonds that it's not at the moment not the best keeper of value, is it? Because prices are deteriorating, and that is never a good idea. But I think that what I would say that in general, in principle, what we've always been very vocal about it, if you make it all about prices, if you're really changing, also only chasing prices, you will always be a slave to the prices. So if you don't build a consumer proposition, and more importantly, if you don't build a brand around what you're selling, then you're screwed no matter what.
Damiano, do you wish to add something?
I see from our point of view, there are companies that are trying to explore the possibility to move their white gold to platinum. And I want to answer something that Tim said before. I do believe that was a problem to make platinum jewelry. And the issue today is to embrace the technologies that are really helping very much in making jewelry with platinum. And again, additive is one of them, but other company I saw worldwide, for example, in US, is very common practice to go to hot isostatic pressing for everything they are doing by casting. And this is also helping very much to get a quality that is, how to say, acceptable, because the high temperature that platinum needs to be casted is the one that is giving some different issue when you compare with gold. So in general, I believe that I'm really watching why the high-end jewelry brands, they keep, even if they are not very much impacted by gold price that is growing, but somehow they will really try to do something. But they are not going to try to change their value proposition instead of white gold, which is today very expensive also because of the palladium inside, and moving to something that is higher in purity. Instead of 18 karat, is 95%, and it is the original white precious metal.
Thank you very much. I'd like to bring in John Butler, if I may. I mean, John, could you briefly sum up the key drivers presently of the platinum and the palladium markets, and also give your sort of price projection for 2025, which I believe would be an average price? So very roughly, platinum prices are around about $936 per ounce currently. Palladium price is very, very slightly higher than that. What are the key drivers, John Butler, and what's the outlook for those two metals?
Yes, thank you, David. So the main drivers really for both platinum and palladium are industrial ones. I mean, these are industrial metals principally. Of course, platinum has a very significant share of jewelry manufacturing, but essentially for palladium, it is more or less 80% and also catalyst metal used in catalytic converters, whereas for platinum, it's more like 35–40% with a significant 30 or more jewelry percent, and then the rest is other industrial applications of one form or another, whether that's in petrochemicals, in fine chemicals, pharmaceuticals, or refining. Now, all of those things, all of those traditional industrial areas may start to see some greater demand as we go in 2025. There is clearly a policy shift underway in the United States, and that will become more apparent in the coming days in terms of reshoring manufacturing, investing in particular in the oil and gas industry, and of course, lessening some of the support that has been directed at electric vehicles potentially. Of course, it's a little early to say exactly how this will play out, but at least some of the comments on the campaign trail by the key people in the incoming administration suggest that support for EVs will be left. Whether that will be an outright abolition of some of the EV mandates or less support through the Inflation Reduction Act and other things, that remains to be seen. But what seems clear is that there will be a resurgence in demand for platinum and palladium in the automotive industry. That there's, in effect, life in the old dog yet. And that's not just in conventional ICEs, it's also in hybrids. And we're already seeing that shift underway here in Europe as some of those more ambitious targets for EVs are being somewhat scaled back, and hybrids are seen as the interim solution, offering many of the same benefits, but without some of the challenges on infrastructure and material availability. So all that is to say that platinum and palladium ought to do better in 2025 in terms of some of their core industrial demand areas, automotive in particular, but also oil and gas and the related petrochemical sector. Now, to answer the question about the price implications of that, I mean, generally we are constructive on the prices of both. As you say, we're around the sort of 950 level or just below in both metals right now, and the average prices last year were 956 in platinum and 983 in palladium. So palladium just about outperformed platinum and maintained its premium. We do see that shifting. We see platinum going into a premium against palladium over the next year, but on average, trading at a very similar level. So 1025 is the Mitsubishi forecast for palladium next year, and 1050 for platinum. So on average, only $25 per premium, so less than 2.5%. But the shift that's gradually underway, the platinum becoming the more favorable metal in terms of its supply-demand dynamics, and palladium potentially falling somewhat out of favor as we see that shift underway. And part of that is about supplies. I haven't mentioned primary or secondary supplies yet. Platinum supplies are constrained, as Tim and many of the panelists know. South Africa is undergoing some tough times in terms of the mining sector. The base price of these metals is not sufficient to incentivize new investment in shaft development, and as a result, we see a flatlining of supplies with potentially some declining supplies in the future. And that is naturally going to tighten the platinum market more than it is the palladium market. There's still an open question on the palladium market, from where 40% of palladium is coming from Russia, and whether there'll be some solution in sight in the Russia-Ukraine conflict, and whether that might mean that palladium comes back to the international market from Russia. As you know, many European countries, the United States and several others have effectively blacklisted palladium from Russia, and many companies in the supply chain have delisted Russian metal as well. When we see metal coming back from Russia, that opens things up a little bit, and potentially there's a little bit of downside in the palladium price. But right now, we are constructive, probably more so on platinum than we are on palladium.
So near term, John, you're saying that there will be slight upside in palladium prices over platinum, but into 2026, platinum would extend a premium over palladium. Is that correct?
That's right. We gradually see palladium moving into a higher price level against platinum.
All right. Thank you so much. And I'll come back to you shortly regarding silver, and please do wave your hand if you want to jump in at any point in our discussion. Tim, looking at what these numbers mean to you, and also to the marketing of palladium jewellery. Clearly right now we've got a very slight premium of palladium over platinum, and yet generally platinum would be seen as the superior jewellery metal in qualitative terms. Does that make it difficult for you to market palladium jewellery, or do you have to find innovative answers in order to find ways forward for the marketing of palladium jewellery?
Well, first of all, let me be clear, I wouldn't advise anyone to do palladium jewelry. And I think that I think supposedly it was Einstein who said that the definition of madness is trying the same thing over and over again and expecting different results. And I think we've seen many inroads, I think 2 big attempts now to really create palladium jewelry as a distinctive segment, and we feel that's not right, because it's only adding to confusion. Quality-wise, you don't gain anything from it. You're not doing a consumer service. So I think that really is, palladium might have niches here and there where it can play, and where we're open to that. It's a platinum group metal to begin with, but unless prices are significantly dropping, where we could see that in the long run, if the price were to drop at some point, yeah, there could be a space for fashion jewelry, or let's say jewelry adjacent categories, but we don't see palladium jewelry as something worth pursuing.
Okay, so back to the front lines, Andrew. And I remember a few years ago, palladium prices were sky high and hallmarking numbers in palladium plummeted. I mean, do you still manufacture palladium jewellery very much, or is it dead?
No, it's gone, and I wouldn't want it back. It's very difficult to manufacture, and it's just a difficult metal to work with. I would take platinum all day long over palladium.
There was a moment, wasn't there, a few years ago when palladium jewellery was marketed as men's wedding bands. Is there any possibility or prospect for that in the future to come back or not?
Not in my business. I don't see it coming, no.
Any comments from the other panellists on palladium?
No, I mean, palladium had an opportunity when platinum was much higher than palladium, and there was already an established demand for platinum. So you always create, or you try to create, niche markets, but this is really what it would be. It's a curiosity in the jewelry sector at most.
I personally, I'm sure we all agree, the role of palladium in jewelry is just for whitening gold.
Yeah. Okay. Good. John Butler, could you briefly sum up the key drivers of the silver market and your price projections for silver into 2025 and maybe 2026? Often silver correlates loosely with gold in the marketplace. Do you foresee that loose correlation being maintained? What are the key drivers of silver, and what's the outlook?
Yes, we do see that correlation being maintained, David. Historically, the two tend to trade in tandem. Of course, they're driven by many of the same factors: lower interest rates, a weaker dollar, global uncertainty. Of course, the investor side of it is almost favoring silver at the moment, because gold, with its very high handle, is inaccessible to the retail investors. So there is a portion of the population that is buying into silver ETFs, silver physical investment products, other types of silver products that can be sold quite easily. The issue, I think, for silver is what's going to happen on the industrial demand side. It's going to be very tough this year, because it's going obviously against that that potential changing macroeconomic environment. The real problem, I think, for silver is what happens to solar photovoltaic demand. That has been the biggest demand driver of silver over recent years. We've seen solar PV installations around the world increase almost exponentially, and each one of those, of course, contains some silver in the backing panel and the interconnects. Now, with the shift in the US administration forthcoming, it's going to be more difficult, I think, for clean energy of all sorts, and that includes solar PV. So in the United States, at least, which is one of the biggest markets for solar PV, and one, incidentally, where most of the silver, or rather the PV panels, are made in China and imported into the United States, that's going to have that double whammy of suffering from potentially a change in policy on clean energy, but also on tariffs. And it's a bit of an open question as to how things will progress. Now, of course, the United States is not the whole world. There is a big wide world out there, and there continues to be global commitments towards climate change reduction, and being, silver is a big part of that. You'll probably still see some silver demand in other parts of the world through PV. But the big question at the moment is what's going to happen on industrial demand in silver going forward. So our forecast is somewhat still quite optimistic, 34.50 for the year as a whole, a kind of gold light in terms of investment performance and also some of the macroeconomic drivers. And that compares against last year's average of 28. So it's, significant upside from where we see now. But some key uncertainties in all of that.
John, thanks so much. Quick question then on silver. So John is foreseeing quite a significant upside in the silver price, maybe of the ballpark 15–16%. Andrew, what are your thoughts on the outlook for manufacturing of silver jewellery in the context that prices have been quite toppy to the upside? I mean, do you think there can be more potential demand, say, in marketing highly designed and stylized silver jewellery as a more upmarket product in response to the price upside? Any thoughts on silver jewellery marketing?
I think in terms of silver manufacture of jewellery within the UK, that's probably highly unlikely. You'll get certain pieces for people that will want something that is unique and wonderful. I think general silver jewellery that is typically made elsewhere in the world will continue to be required, because it'll be countered by the increase in the gold price. So people are still, I know it sounds boring, but I keep coming back to people have a certain amount of money to spend, and it's that value that doesn't change. They don't suddenly have €1,000. It's I've got €500 in my pocket, and what am I going to get for that? So I think as we see these things move around the world, then that's where they'll drive for their piece. So I think you'll continue to see fantastic pieces of jewellery made, but it's not necessarily UK based, not on mass production.
Okay, so we're just coming to wrap up now. I want to talk very briefly about osmium, which is an interesting innovation in this whole discussion, and then maybe we have time for one or two questions. Steve, guide me on that. I don't see you right now. A little bit of time, okay. Osmium, I just want to open this wide open to the floor. Osmium is derived from platinum ores. The Osmium Institute, which markets crystalline osmium, are saying that its prices have been rising over the last few years due to tight supply and rising demand. It is an inlay that is bluish white and sparkly and is set in gold jewellery. Just wondering what your thoughts are on the outlook for osmium jewellery. John.
Yeah, so osmium is the rarest of the PGM elements, but it's also the cheapest. There is very limited market for osmium, which is normally in the powder shape. And indeed, there is one company which developed a process to make it crystalline. It's a little bit like somehow like lab-grown diamonds. You have a synthetic product, and you can't really know what is the exact reselling price until you really do have a buyer. So the crystalline osmium is sold at a huge premium compared to the sponge. We are talking a factor of more than 100. The willingness to buy it back depends currently on exclusively one company. So I think it's really an interesting product, but you can't really use it as an investment medium. It's probably, there may be some small applications in jewelry, perhaps in watch sector industries, but I don't think it should be regarded as an investment product. It would be very dangerous to do so.
Any other comments before we go on to questions? Tim?
Well, no, what we would say is that as osmium is part of the platinum family, we've seen that there's quite some buzz around some of the jewelry in osmium, and we welcome any kind of innovation in there. I cannot make any comment on prices, or I'm not even allowed to comment on platinum prices, to be honest.
Okay, thank you very much. Just very briefly, John Butler, do you have anything to say on osmium? Do you follow osmium?
Well, I certainly don't have an osmium price forecast. Sorry to disappoint you. No, we don't trade this as Mitsubishi for some of the reasons that John Jodry has outlined. It's not really recognised as one of the precious family in the sense that of being traded alongside things like platinum or palladium or even rhodium, ruthenium, and iridium. And what I would say is it's a very, very small market, and there aren't that many products out there for investment or for any sort of physical trading. It can be hard enough at times seeing liquidity and things like ruthenium and iridium, and osmium is obviously off the scale when it comes to that. So no real comments on that from me.
So thank you, John. Thank you, panel. Are there any questions? And please do wave frantically at me because it's quite hard to see you. Mr. Gaetano.
Yes, thank you very much. I start from the end about osmium. I mean, the precious metals are very clear listed in our precious metal blue book and also listed in the Vienna Convention, which, as you know, is the SA office organization in Europe and around the world. But on top of that, the success of every innovation is related to the interest of the consumer in doing this. With that, I simply want to state exactly this, nothing against any precious metal. I would like to take this opportunity to thank the panelists and thank the four of you here, and obviously you, David, and Jonathan, that I can see wonderfully on the big screen. And by the way, you miss Vicenza, and we miss you. And it is important for the entire industry that the precious metals here represented in the segments that each one of the panelists represented here, and the wonderful relation we have with IPMI is essential, because on top of that, in line with the previous panel, we have to give to the new generation joy, and the precious metal are part of that joy. So thank you for what you have said. Thank you very much to you, David.
So thank you very much, everybody. Thank you, panel.
Thank you.